Goodwill, patents, trade names, customer relationships, internally developed software. These are all examples of intangible assets. Today, we're going to discuss how to value them. First, income-based methods, and we start with the multi-period excess earnings method, MPEEM. You start by projecting the cash flows attributable specifically to the intangible asset that you're trying to value, say customer relationships, and then you discount them to present value. Finally, you subtract from that the present value of normal customer relationships in the industry. The mechanics is similar to the excess earnings method discussed last time, so check out video 31 for more details. Another income-based method is the relief from royalty method, which estimates the value that a company would have to pay to license a certain trade name or technology and then capitalizes those avoided payments. Second, market approaches, where we look for observed royalty rates, license deals, transaction multiples on comparable IP or customer lists, and then apply those metrics to the subject asset. Data can be thin, but when available, it provides a strong cross-check. Third, cost-based methods, typically used when cash flows are hard to pinpoint. For example, internally developed software, R&D, or specialized workforce. Here, we try to ascertain how much it would cost a market participant to reproduce or replace those assets. Using an industry expert is typically the way to go. We also typically use a cost approach to determine the value of goodwill in an acquisition. From the total value paid, you subtract the adjusted net asset value of the company, as discussed in episode 30. That's your goodwill. To get to the value of goodwill outside of an acquisition, you can either do an income approach and subtract from it the adjusted net asset value as discussed in episode 30, or, if you must, you can use the excess earnings method discussed in episode 31. See you next time.
Gatto Consulting, Business Valuations, Fractional Financial Services, Strategy, M&A.